Let me ask you about zero commissions. I find this very interesting, and I'm wondering how it might change the calculus that active investing is worth it or not investing, because obviously for years, people like you and Bogle have been, Jack pointed out, that when you include net of fees and all expenses, that's where active management really falls down. But with commissions at zero and fees still high but coming down, does that start affecting the overall calculus? Is it less obvious than it used to be about being concerned about the cost of fees and commissions?
Actually, the chances are that it's being offset by the driving forces that make indexing so darn attractive, which are everybody has everything in the way of information at exactly the same time because of the extraordinary distribution of information that's taking place in the markets. And it is astonishing how much information is available all the time to virtually everybody who's playing. It's a little bit like playing cards with all the cards face up. The world has changed, and most of us are still living with visions or understandings that were formed years ago, and we ought to be revising. I love Kate's wonderful comment. When the facts change, I change my opinion. What do you do about yours?
Yeah. Dave, you're a student of this as well here. Does the fact that ETFs are driving costs down and commissions are zero, I wonder if how much that still affects the whole idea that net of costs, active investing still isn't worth it. I mean, the calculus changes a little bit at zero commissions.
Yeah, I think what it does is, to Charlie's point, right, information is now sort of freely available, moves instantaneously. There really are no core informational edges. What I do think exists are structural edges, and those tend to be very thin, and they tend to be very transitory. What I mean is, looking at particular skews, say, in the derivatives market, or looking at arbitrage opportunities between venues because of time delay. Like, those things still exist. They exist in infinitely small amounts, and so therefore you have to run enormous volumes through those edges to create any value. But those things exist. That's not what we're talking about when we're talking about people positioning for their retirement account. So I think what we've done is move a lot of the available VIG, if you will, in the market to a fairly rarefied part of the market. And the core stock and asset selection that most of us have to live with in the world, I would agree with Charlie. I think for most people, focusing on low-cost, broad, diversified indexing is going to be the way to go.